In this session, you'll learn powerful Gann Astro methods, originally used by Gann himself to identify precise market turning points. We will study the exact mathematical and astronomical techniques he first applied to calculate major highs and lows in the stock market. Gann tangent expansion method, Gann cosine retracement method, Gann circle projection method, Gann square root rotation method, Gann degree projection method. Now watch this lesson till the end and take notes on every step of this method. If you truly put in the effort to understand and apply this on your live charts, it will separate you from the majority of traders because most never go this deep. Before we deep dive into Gann Astro lessons, here is a financial disclaimer. This content is for educational purposes only and does not constitute financial or investment advice. Trading involves risk and you may lose capital. Always do your own research before making any financial decisions. Let's start with a simple question. Can time be derived from price? Here we take the range and apply some math. This gives us a cycle. And when we divide that cycle, we get specific points where the market is more likely to respond. What we just calculated gives us a cycle. But this raises a deeper question. Why can a cycle be divided in such a precise way? Why do these divisions actually matter? To understand this, we need to go back to one of the most fundamental ideas in geometry, the circle. A complete cycle is represented as a circle, and that circle is divided into 360 degrees. This division of 360 degrees comes from an ancient numerical system based on 60. The number 60 has a unique property. It can be divided into many equal parts, including 2, 3, 4, 5, 6, 10, 12, 15, 20, and 30. Because of this flexibility, it allows a cycle to be broken down into smaller and precise segments. This becomes even more powerful with 360. It can be divided into multiple equal parts. This allows a complete cycle to be structured into meaningful divisions. And once a cycle can be divided, those divisions begin to act as reference points. They create a structure within the cycle, rather than leaving movement completely random. A full circle is measured as 360 degrees. Each degree is divided into 60 minutes, resulting in 21,600 minutes of arc. Each minute is further divided into 60 seconds, giving a total of 1,296,000 seconds. This shows how a single cycle can be measured with increasing levels of precision. If market movement follows a cycle, then these divisions represent points in time where changes in behavior are more likely to occur. Not randomly, but as part of that underlying structure. What we calculated earlier for the chart of silver is simply a way of defining that cycle directly from price itself. So instead of assuming time, we derive it from the market. Now, let's look at another example of gold and see how the market behaves when these time divisions are applied. From the selected range, we project forward and observe how price evolves over time. At the first interval, the market begins to expand, moving with clear direction and momentum. This is followed by a phase where price slows down and starts consolidating, showing time accumulation. During this period, the market is not trending, but building structure within a range. And as we move into the next interval, we again see a shift, where price transitions back into a directional move. This shows that the market is not moving randomly, but unfolding in phases around specific points in time. Now, geometry is not something artificial that humans invented to describe reality. It is something we discovered by observing how reality is already organized. The universe is not filled with shapes, it is made of them. These geometric forms are embedded within the structure of space itself. They define how things exist, how they relate to each other, and how movement unfolds within that space. Geometry is not decoration. It is structure. Space is often thought of as empty, but in reality, it is highly structured. Space has shape. This means that movement does not happen in a vacuum of randomness. Every movement occurs within a framework that has proportions, boundaries, and measurable relationships. Whether it is the movement of planets, waves, or price itself, it unfolds within a structured environment. That structure is what allows consistency to exist. Once a structure exists, it naturally allows measurement. Every geometric form contains internal relationships that can be quantified. Angles, distances, and proportions are not imposed on the shape. They emerge from it. For example, a triangle will always have a fixed sum of angles, regardless of where it is drawn. This consistency is what makes geometry reliable. It provides a stable foundation for understanding movement through measurement. Among all geometric forms, the circle holds a special position because it represents completeness. It has no starting point and no end point, only continuous motion. This makes it the ideal representation of a cycle. When movement is mapped onto a circle, it becomes possible to track progression, division, and return. The concept of a cycle is not abstract. It is directly tied to this geometric structure. When movement is viewed within a geometric framework, it is no longer perceived as random. It begins to show patterns, proportions, and relationships. These relationships create order. Instead of seeing movement as chaotic, we begin to see it as structured. The divisions within a shape become reference points, and these reference points begin to define how movement behaves over time. If geometry defines structure in space, and movement occurs within that structure, then movement itself must follow that same order. Markets are not separate from this principle. They are part of the same reality. If price is a form of movement, then it is also subject to structure. This means that what appears random on the surface may actually be following a deeper, measurable framework. So, if geometry defines structure, then number defines geometry. Every shape can be expressed numerically. Angles, proportions, and relationships are all governed by numbers. This is where Gann focused his work not on price alone, but on the numbers behind movement. As we have seen, the simplest geometric form is the triangle. Each angle measures 60 degrees, giving a total of 180 degrees. 3 multiplied by 60 equals 180, forming a complete and balanced structure. Gann studied these kinds of natural divisions very closely. In his work, especially through tools like the square of 9, he used geometric relationships to map numerical progression. The square of 9 itself is built on the idea that numbers expand in a structured way, forming angles such as 90, 180, and 360 degrees. A square introduces a new level of balance. Each angle is 90 degrees, and the total becomes 360 degrees. For multiplied by 90 equals 360. This becomes the foundation of the cycle. Gann used this concept extensively to define completion and balance in markets. Now observe the harmonic structure. 90 multiplied by 2 equals 180. 90 multiplied by 4 equals 360. 45 multiplied by 8 equals 360. These are not random numbers. They are harmonic divisions of the same cycle, and Gann considered them key turning points. Now we move deeper into the numerical structure. 72 is a fundamental number. 72 multiplied by 5 equals 360. This means the entire cycle can be divided into 5 equal segments. Gann observed such divisions in both time cycles and price movement. From 72, a sequence begins to form. 72 multiplied by 2 equals 144. 72 multiplied by 3 equals 216. 72 multiplied by 6 equals 432. This creates a harmonic progression that repeats across different systems. 432 becomes a central number. It is derived directly from 72. 432 divided by 2 equals 216. 216 multiplied by 10 equals 2,160. This connects directly back to 360 through multiplication and division. Now observe the connection. 2,160 divided by 6 equals 360. This shows that higher numbers are simply scaled versions of the same structure. Gann used this idea to move between price levels and time cycles. Adding zeros does not change the structure. 216, 2,160, 21,600 all follow the same numerical relationship. Only the scale changes, not the underlying proportion. Gann applied these numerical relationships directly to market charts. He believed that price and time follow the same proportional laws as geometry and number. This allowed him to translate numerical structure into market movement. In this approach, price is not just value. It is a number within a structured system. Once price is treated numerically, it can be aligned with angles, cycles, and harmonic relationships. Time, in the same way, is not random duration. It is a division of a larger cycle. Just like 360 degrees can be divided into smaller parts, time can be divided into intervals that align with structure. This leads to a key idea in Gann's work. When time and price align within the same numerical structure, a point of balance is reached. And at balance, the market is more likely to react. When we look at market movement, most traders only see it in one dimension. Price goes up, price goes down, and everything is interpreted as vertical movement. But this is a very limited way of looking at the market. In reality, every movement has direction, proportion, and structure, which means it also has an angle. The moment you introduce angle into the analysis, you move from simple observation into geometry. The sine function comes from the geometry of a circle. It is not an arbitrary formula. It is a relationship between a point on a circle and its projection. When you apply sine inverse to a value, you are essentially asking one question: what angle produces this movement? This shifts the perspective completely. Instead of measuring how much price moved, you begin measuring how that movement fits into a geometric structure. Now, if we move from the triangle to the circle, the idea becomes deeper. Imagine a point moving around the edge of a circle. As that point rises and falls, its vertical position changes smoothly. That changing vertical position is what sine describes. So sine is not only a triangle formula. It is also a way of measuring how movement unfolds within a cycle. This is why sine belongs naturally to circular geometry. A circle is the complete expression of a cycle, and sine measures the changing state of a point as it progresses through that cycle. This is where sine inverse becomes important. If sine tells us what vertical proportion belongs to a given angle, then sine inverse asks the reverse question: if we already know the proportion, what angle produced it? That is a major shift in perspective. Instead of starting with geometry and getting a number, we start with the number and recover the geometry behind it. That is why sine inverse feels so powerful. It turns a measured result back into an angular cause. At a basic level, this means that when you see a value, you do not have to treat it as just magnitude. You can treat it as evidence of position within a geometric process. For example, if a normalized movement corresponds to the sine of 30 degrees, that movement is not just small. It is geometrically in an early phase. If it corresponds to 60 degrees, it is in a stronger phase of expansion. If it approaches 90 degrees, it is reaching a limit of projection in that framework. So the angle is not simply decoration. It gives context to the movement. At an intermediate level, sine inverse allows us to stop looking at movement as a straight-line quantity and begin seeing it as part of a curved, cyclical structure. Most traders measure range in points, pips, or dollars. That is useful, but it is still linear. Geometry asks a different question. It asks where that movement sits within a form. Once you convert movement into an angle, you're no longer only measuring size. You are measuring position, progression, and phase. This is a more structural way of understanding movement. At a more advanced level, this becomes very important because markets often do not behave in purely linear ways. They expand, contract, accelerate, stall, and reverse. A purely arithmetic view often misses the inner rhythm of these changes. But an angular view introduces the idea that movement can be studied as progression through a cycle. In that framework, different angular zones can correspond to different states of behavior. Gann was deeply concerned with the relationship between number, angle, time, and price. His work repeatedly returned to the idea that market movement can be expressed geometrically, whether through the square, the circle, or angular divisions such as 45, 90, 180, and 360 degrees. He was always translating market behavior into measurable structure. Now let us bring this into trading. In trading, the usefulness of sine inverse is not that it magically predicts the market. Its usefulness is that it gives you a way to reinterpret price movement geometrically. First, you take a meaningful range, usually from a clear swing low to swing high or swing high to swing low. Then you normalize that range so it becomes suitable for angular conversion. After that, applying sine inverse gives you an angle that represents the movement in geometric terms. That angle can then be treated as a structural reading of the market rather than just a raw price measurement. Once you have the angle, you can use it in several ways. One use is phase identification. A smaller angle may indicate that the move is still developing. A larger angle may suggest that the move is entering a more mature state. Another use is comparison. If two different swings produce similar angles, even if their price magnitudes are different, they may belong to similar structural phases. This can help you compare movements across time frames or across different market conditions. A third use is projection. Once movement has been converted into angle, it can be related back to cycle divisions, such as quarter cycle, half cycle, or full cycle logic. Let's observe this example. We begin by identifying a clear range between the low and the high. This range represents a complete unit of movement, not just in price, but as a measurable structure. Instead of treating it as distance alone, we convert it into a form that can be interpreted geometrically. Using the sine inverse relationship, the range is transformed into an angular value. This shifts the perspective from linear measurement to geometric positioning. The result is not just a number, but an angle that represents where this movement exists within a cycle. This is the key transition from price to structure. The calculated angle falls into an early stage of the cycle. This means the movement has initiated but has not yet developed into a complete structure. At this stage, the market is still forming direction, not confirming it. This is a phase where expansion is possible, but not guaranteed. As price approaches this phase, we observe how it behaves rather than assuming continuation. Instead of strengthening, the movement begins to weaken and lose momentum. This indicates that the structure is not progressing into higher phases. The cycle is not completing, it is breaking. The reversal occurs not because of randomness, but because the movement remains incomplete. Without reaching a higher angular phase, the expansion lacks stability. This creates a condition where the market transitions instead of continuing. What appears as a sudden reversal is actually a structural response within the cycle. In the next example, we again begin by identifying a clear range between the low and the high. This range represents a complete unit of movement that can be measured and converted into structure. Rather than treating it as a simple price move, we translate it into a geometric form for deeper analysis. Using the same approach, we normalize the range and apply the sine inverse relationship. This gives us an angular value of approximately 33 degrees. This angle represents where the movement exists within a broader cycle, not just how far price is moved. Unlike the previous example, this angle does not fall in the early phase. At around 33 degrees, the movement is already developing structure. This indicates that the market is moving beyond initiation and entering a more stable phase of expansion. As price progresses from this point, we observe continuation rather than failure. The market holds its structure, forms higher levels, and continues moving in the same direction. This confirms that the movement is aligned with a developing phase within the cycle. Because the movement has reached a higher angular phase, it gains stability. At this stage, the structure supports continuation rather than reversal. The market is no longer forming direction, it is expressing it. Not all movements behave the same way, even if they appear similar on the surface. By converting price into angle, we can identify whether a move is still forming or already developing. And that difference determines whether we expect continuation or instability. Movement is not defined by price alone. It is defined by the relationship between change and progression. Whenever something moves, two dimensions are involved: how far it moves and how long it takes. This relationship is the foundation of measurement. When we compare change to progression, we form a ratio. This ratio expresses how much movement occurs per unit of time. In geometry, this relationship is called slope. Slope is not just a visual incline. It is a precise numerical expression of movement. Slope tells us the intensity of movement. A higher slope means a large change in a short duration. A lower slope means slower, more gradual progression. Even if two movements cover the same distance, their slopes can be completely different. This is what differentiates weak movement from strong movement. Once slope is formed, it naturally creates a triangle. The vertical side represents change, the horizontal side represents time, and the diagonal connects both. This triangle is not drawn artificially. It emerges directly from movement. In this triangle, the tangent function describes a specific relationship. Tangent of an angle is defined as the ratio of the opposite side to the adjacent side. In simple terms, it is the ratio of vertical movement to horizontal movement. This makes tangent a direct mathematical expression of slope. Tangent does something very powerful. It converts a simple ratio into an angle. Instead of saying movement is fast or slow, we can now describe it geometrically. Every slope corresponds to a specific angle, and that angle carries structural meaning. When we apply tangent inverse, we reverse the relationship. We take a ratio and we find the angle behind it. This transforms raw movement into geometric position. The market is no longer just moving. It is progressing through an angular structure. Angles allow us to compare movement consistently. A 45-degree angle represents balance, where change and time are equal. Angles above this indicate stronger expansion. Angles below this indicate weaker movement. This creates a clear framework for interpreting strength. Gann used angles to study the relationship between price and time. He treated the 45-degree angle as a point of equilibrium. Movements above or below this angle indicated shifts in strength and balance. This allowed him to measure market behavior geometrically. Now, if movement can be expressed as a ratio, and that ratio forms a slope, and that slope can be converted into an angle, then movement is no longer just observed, it can be calculated geometrically. This leads to a simple but powerful idea. If movement already contains structure, then that structure can be measured directly from price and time. We do not need to assume strength. We could derive it mathematically. This relationship can be expressed like this. Here, price represents vertical movement, and time represents horizontal progression. Their ratio gives slope, and tangent inverse converts that slope into an angle. This angle now represents the intensity of movement. Now let's see this in charts. In this example of Bitcoin, we begin by identifying a clear movement between the high and the low. This gives us a measurable range, which represents the total price change within a defined period. But instead of treating this as distance alone, we relate it to the time taken for that movement. This movement unfolds over 15 bars. By combining price and time, we move from simple observation into a structured relationship. Now, the movement is no longer just how far price moved, but how quickly that movement occurred. When we divide price change by time, we obtain slope. This slope represents the rate of movement, showing how much price changed per unit of time. At this stage, we are measuring intensity, not just magnitude. Using the tangent inverse function, this slope is converted into an angle. This transforms the movement into a geometric representation. Instead of describing the move as fast or slow, we now express it as an angular structure within a cycle. The calculated angle is extremely steep, approaching 90 degrees. This indicates that price moved very rapidly in a short period of time. Such movement reflects imbalance rather than stability. It is not controlled expansion, but accelerated movement. Because the movement is too steep, it cannot sustain itself. The structure becomes unstable, and the market fails to continue higher. This leads to a reversal, not as a random event, but as a response to excessive expansion within a short time. In this example of S&P 500, we define a clear movement between the low and the high. This movement unfolds over 45 bars. By including time, we move from simple measurement into a relational structure. Now dividing price change by time gives a slope. This represents the rate of movement. At this stage, we are measuring how efficiently price is progressing. Using the tangent inverse, this slope is converted into an angle. This allows us to express movement geometrically rather than descriptively. The resulting angle is around 69 degrees. This indicates a strong and sustained movement. Unlike extreme angles, this level reflects expansion that is still controlled. Because the movement is strong but not excessive, the market is able to maintain structure. Instead of immediate reversal, price continues to develop within the trend. This shows the difference between balanced expansion and unstable acceleration. When price moves, it does not simply go up or down. Every movement contains two phases, expansion and contraction. Expansion pushes price away from a reference point, while contraction pulls it back toward equilibrium. This interaction creates the structure we observe as trends and pullbacks. Expansion is directional and aggressive. It creates distance and establishes movement. Contraction, on the other hand, reduces that distance. It is not random weakness, but a natural balancing process. Without contraction, movement cannot sustain itself. To understand contraction properly, we return to geometry. A circle represents a complete cycle of movement. Every point on the circle corresponds to a specific angle. As movement progresses through the circle, its position can be measured using angular relationships. Imagine a point moving along the circumference of a circle. As that point changes position, its horizontal and vertical projections also change. These projections are not random. They follow precise mathematical relationships defined by trigonometric functions. Cosine measures the horizontal component of movement. In a right triangle or circle, cosine is defined as the ratio of the adjacent side to the hypotenuse. This means cosine tells us how much of the original movement remains when viewed from a horizontal perspective. This is the key idea. If sine represents expansion, cosine represents contraction. As the angle increases, cosine decreases. This means less of the original movement remains. This is not random loss, it is structured reduction. As the angle increases, the remaining portion of the original movement begins to decrease in a structured way. At 0 degrees, cosine is 1, which means the entire movement is still intact. Nothing has been reduced. At 30 degrees, the value drops to approximately 0.866. This shows that most of the movement remains, with only a small contraction. At 45 degrees, the value becomes approximately 0.707. This represents a more noticeable reduction, where the movement is beginning to rebalance. At 60 degrees, cosine equals 0.5, meaning only half of the original movement remains. This progression is not random. It follows a precise mathematical structure, where each increase in angle results in a proportional reduction of the original move. If market movement follows structure, then contraction should also follow structure. What appears as a pullback is not random. It is the market reducing a prior expansion based on internal relationships. Traditionally, retracement is measured using percentages, but these percentages often feel arbitrary. From a geometric perspective, retracement can be seen as angular contraction. Each level represents how much of the original movement remains. Instead of relying on fixed or predefined ratios, we derive retracement levels directly from angle. This means we are no longer assuming where price might react. We are calculating it based on the structure of the movement itself. By taking the total range and multiplying it by the cosine of a chosen angle, we convert that angular position into an actual price level. This allows us to translate geometry into market structure, where each level represents a specific stage of contraction within the original move. Certain angles produce specific and meaningful levels of contraction within a movement. At 30 degrees, most of the original move is preserved with only a slight reduction. At 45 degrees, the contraction becomes more noticeable, reflecting a balanced adjustment. At 60 degrees, the movement is reduced to half of its original size. When these angular relationships are applied to price, they translate into clear retracement levels. 86.6% represents a shallow pullback, where the market retains most of its prior movement. 70.7% reflects a more balanced retracement, where price adjusts without breaking its structure. 50% represents a deeper correction, where a significant portion of the move has been reduced. These levels show how much of the original movement remains intact. Each level reflects a different condition within the market. At 86.6%, the trend remains strong, with only minimal contraction. At 70.7%, the market undergoes a healthy correction while still maintaining its overall direction. At 50%, the movement reaches a deeper state of rebalancing, where continuation becomes less certain. Gann viewed markets through geometry and proportion. He did not treat retracements as arbitrary percentages. He understood that movement follows measurable relationships. Using cosine aligns with this idea because it derives levels from geometric structure, not assumption. This changes how we interpret pullbacks. Instead of asking, how much did price retrace? We ask how much of the original movement still remains. This is a structural question, not a superficial one. If contraction follows angular structure, then we can calculate retracement levels directly from that structure. We're no longer relying on fixed tools. We are deriving levels from the movement itself. We begin with a defined range. From that range, we apply cosine to selected angles. Each angle gives us a level where contraction is likely to occur. These levels are not predictions, they are structural reference points. This is the core formula used to derive retracement levels from geometric structure. We begin with the total range, which is the difference between the high and the low. This range represents the full movement of price. We then multiply that range by the cosine of a selected angle, such as 30, 45, or 60 degrees. Each calculated level represents a point where the market may reduce its expansion in a structured way, not randomly, but according to geometric proportion. Retracement is not weakness. It is contraction within structure. And when contraction is understood geometrically, it becomes measurable, predictable, and meaningful. Each angle produces a different level of contraction, allowing us to calculate where price may naturally retrace within that movement. Let's see how it works in charts. In this example, we begin by identifying the high and the low of the movement. This gives us a total range of 1.133. To derive the retracement, we apply the cosine of 60 degrees to the range. 60 degrees represents a deep level of contraction, where half of the original movement is expected to remain. This allows us to calculate a structured reduction of the move. Multiplying the range by 0.5, we get a value of 0.566. This represents the amount of movement that will be reduced from the original expansion. We subtract this value from the high. This gives us a retracement level of 159.899. This level represents a deep correction point derived directly from geometric structure. As price reaches this level, we observe a clear reaction in the market. The movement respects this structure, and instead of continuing upward, it begins to reverse. This confirms that the retracement is not random, but aligned with a measurable geometric relationship. Now let's look at another example of this method. We begin by identifying the high and the low of the movement. This gives us a total range, which represents the full expansion of price. This range becomes the foundation for calculating all retracement levels. Once the range is defined, we begin by calculating each retracement level step by step. First, we take the total range, which is the difference between the high and the low. In this case, the range is 8.9476. Now, we apply cosine to different angles to understand how much of this movement is retained. For the 60-degree level, cosine is 0.5. So we multiply 8.9476 by 0.5, which gives us approximately 4.474. This value represents the portion of the move that is reduced. We then subtract it from the high to get the retracement level, which comes near 82.38. In the same way, for 45 degrees, cosine is approximately 0.707. Multiplying the range by this gives a higher retained portion, resulting in a retracement level near 80.53. And for 30 degrees, cosine is approximately 0.866, which retains most of the movement, placing the retracement level near 79.11. Once these levels are calculated, they are projected onto the chart as structured zones. Each level represents a different depth of contraction, allowing us to visually track how price reduces its prior movement within a clearly defined geometric framework. As price moves downward, we observe how it interacts with these levels. Instead of breaking through them, price finds support within these zones. Multiple reactions occur near the cosine levels, showing that the contraction follows structure. The market does not collapse below the deeper levels. This indicates that the movement is not breaking down, but simply contracting within a trend. The structure remains intact, and the underlying movement is preserved. After respecting these contraction zones, price begins to expand again. The market transitions from contraction back into expansion, continuing in the original direction. This confirms that the retracement was part of a structured cycle, not a reversal. When we observe any form of movement, it does not unfold in isolation. It progresses through phases: beginning, expansion, transition, and completion. This sequence is what we call a cycle. It is not something imposed on movement. It is something that naturally emerges from it. To understand a cycle clearly, we need a structure that has no beginning and no end. A straight line cannot represent this because it has a fixed start and finish. A circle, however, represents continuity. It allows movement to progress, complete, and return seamlessly. A circle is divided into 360 degrees. Each degree represents a position within the cycle. This division comes from a highly structured numerical system that allows precise measurement and equal segmentation. Because of this, a cycle can be broken down into meaningful parts without losing its structure. Now, imagine mapping movement onto this circle. Instead of viewing price as a linear change, we begin to see it as progression through a cycle. Every movement occupies a position, and that position can be expressed as an angle. To do this, we need to relate price movement to the full cycle. If a complete cycle represents 100% of movement, then any smaller move represents a fraction of that cycle. This fraction can be converted into degrees, allowing us to locate price within the circular structure. This is where the key transformation happens. We take the price movement, divide it by the total cycle, and multiply the result by 360. This converts a linear value into an angular position. Now price is no longer just a number, it becomes a point within a cycle. Once converted, the angle tells us where the market stands within its cycle. Certain angles divide the cycle into clear and meaningful sections. At 90 degrees, the movement reaches its first quarter, where the initial phase of expansion begins to take shape. At 180 degrees, the cycle reaches its midpoint, a stage where the movement often transitions or pauses. At 270 degrees, the cycle moves into a later phase, where the movement begins to approach completion. And at 360 degrees, the cycle is fully complete, returning to its starting point. These angles act as structural markers, helping us understand where the market stands within its cycle. These divisions are not arbitrary. They represent symmetry within the circle. Each level corresponds to a shift in behavior. Movement often changes character as it approaches these angular boundaries. This concept aligns closely with Gann's approach. Gann often converted price into degrees to understand where the market stood within a cycle. He treated price as position, and position as something that could be measured geometrically. Without this framework, we see price as random fluctuations. With it, we begin to see structure progression. We're no longer asking where price will go, but where it currently exists within its cycle. This relationship can be expressed in a simple and structured way. We take the price movement and divide it by the total cycle. This gives us the proportion of movement relative to the full cycle. We then multiply that result by 360, which converts this proportion into degrees. In other words, we are translating price into an angular position within a complete cycle. This formula converts price into position. It takes a portion of movement and maps it onto a complete cycle. The result is an angle that tells us exactly where price is located within that structure. Once we have the angle, we compare it with key cycle divisions. If price is near 90 degrees, it is still developing. If it approaches 180, it enters transition. Beyond that, it moves toward completion. Now that we understand how to convert price into degrees, we can begin to use this structure to identify key points within the cycle where the market is more likely to respond. In this example, the total movement between the low and the high is treated as a complete cycle. This range is then divided into equal angular segments using the method discussed above, mapping price into 90, 180, 270, and 360 degree levels across the chart. As price progresses through these levels, it reacts around the mid and late cycle zones before continuing higher. This shows how price respects its position within the cycle, moving from structure into completion. Now in this example on gold, using the 1 hour time frame, the movement between the swing low and the swing high is treated as a complete cycle. This range is then divided into key angular positions such as 90 degrees, 180 degrees, 270 degrees, and 360 degrees to map price within the cycle. As price moves through the cycle, it reacts around the mid-cycle and late cycle zones before continuing lower. This shows how gold respects its position within the cycle, with reactions forming at key structural points before moving into the next phase. Most traders look at price as a straight line, moving up and down without structure. But this view ignores how movement actually develops. Price does not expand evenly. It accelerates and decelerates in a structured way. To understand the structure, we shift from linear price to square root space. Instead of measuring price directly, we take the square root of price. This transforms uneven movement into a more uniform and measurable progression. In square root space, equal steps represent equal geometric movement. This is important because markets do not grow linearly. They expand in proportion, and square root helps normalize that expansion. Once price is transformed into square root form, it begins to behave like movement along a geometric structure. This connects directly to the concept of the square of 9, where numbers are arranged in a spiral pattern. In this framework, price is no longer just moving upward or downward, but progressing outward through a structured rotational system. Within this spiral structure, movement is not purely directional, it is rotational. Each increment in square root space represents a step around the spiral. This means that price can be interpreted as rotating through a cycle rather than simply rising or falling. This shift in perspective allows us to measure movement in terms of position within that cycle. Gann observed that these rotational steps correspond to angular movement. A full unit increase in square root space represents a full rotation, while smaller increments represent partial rotations. For example, a quarter step corresponds to 90 degrees, and a half step corresponds to 180 degrees. This creates a direct link between price and angular measurement. Once we understand this relationship, we can express it mathematically. We begin by taking the square root of a base price, which places it within the spiral structure. We then add or subtract a chosen step value to represent a rotation. Finally, we square the result to convert it back into a price level. This process allows us to move from price to rotation and back to price again. The formula for this transformation is expressed as the square root of price plus or minus a step value, all squared. Here, the base price represents the starting position, and the step value represents the amount of rotation applied. This formula allows us to calculate new price levels that align with geometric structure rather than arbitrary distance. Each step value corresponds to a specific rotational shift within the cycle. A smaller step represents a partial rotation, while a larger step represents a full cycle. For example, a quarter step corresponds to a 90-degree shift, a half step corresponds to 180 degrees, and a full step represents a complete rotation. These values are not random, but directly tied to the geometry of the spiral. This formula performs a transformation rather than a prediction. It takes price, converts it into a geometric position, applies a rotational shift, and then converts it back into a new price level. The result is a set of levels that are structurally aligned with how the market moves, rather than based on arbitrary measurements. To apply this method, we start by selecting a meaningful price point, such as a swing high or swing low. We then calculate its square root, apply a chosen rotational step, and convert it back into price. These calculated levels act as reference points where the market may respond. These projected levels are used as potential zones of support or resistance. As price approaches these levels, we observe how the market reacts. A strong reaction suggests that the rotational structure is holding, while a break indicates that the movement is transitioning to a different phase. The method can be applied in both directions. Adding step values projects future expansion levels, while subtracting step values projects contraction or retracement levels. This allows us to map both upward and downward movement within the same geometric framework. This approach shifts the way we think about price. Instead of treating levels as arbitrary targets, we begin to see them as positions within a structured system. Price is no longer random movement, but part of a rotational process that can be measured and understood. In this example on euro against the US dollar, we begin by identifying a clear swing low. The base price is then converted into square root space. This transformation allows us to move from linear price into a geometric framework where movement can be measured in terms of rotation rather than simple distance. Once in square root space, we apply rotational increments. A quarter step represents 90 degrees, a half step represents 180 degrees, and a full step represents a complete 360-degree rotation. These steps are then squared back into price, giving us projected levels ahead of the market. These calculated levels are plotted on the chart as horizontal zones. As price moves upward, we observe how it interacts with these levels. In this case, price respects these rotations, using them as support before continuing higher, confirming that the structure is holding. Alongside price, time is measured separately using Fibonacci intervals. These intervals divide the chart into equal progression points, marking potential moments where the market may shift or accelerate. The key observation comes when time cycles align with price rotation levels. At these points, the market shows stronger reactions and cleaner movement. This alignment indicates that both price and time are working together within the same structural framework. In this example on Amazon, using the 1-hour time frame, the same square root rotation method is applied just as we would in any other market. We begin by identifying a clear swing low and swing high. The low acts as the base, and from this point, price is converted into square root space. From the base price, rotational steps are applied. A quarter step represents a 90-degree shift, and a half step represents a 180-degree shift. These are then converted back into price levels and plotted on the chart as structured resistance zones. As price moves upward, we observe that it reacts precisely near the 90-degree level. The market attempts to push higher, but fails to sustain above this rotation, forming a rejection. This indicates that the structure is active and being respected. At the same time, Fibonacci-based time intervals are plotted vertically. These time divisions align closely with the moments where price reaches the rotational levels. This confluence between time and price increases the probability of a reaction. This creates a clear trading opportunity. When price reaches a rotational resistance level and aligns with a time cycle, it signals exhaustion of the move. The rejection at that point confirms weakness, leading to a downward move. After rejecting the rotational level, price begins to move lower with structure. This shows that the level was not random, but part of a geometric framework guiding the movement. This shows that markets, whether Forex or stocks, follow the same underlying principles. Price rotates through structured levels, and when combined with time, these rotations reveal high-probability reaction zones. This is not dependent on the asset, but on the mathematical behavior of movement itself. Let me ask you something. When you look at price on a chart, do you see movement or do you see structure? Most people see price going up and down, but very few stop and think that there might be an underlying system behind it. What if price is not random, but actually moving within a defined structure? Now think about how the market actually behaves. It does not just move in one direction. It expands, pauses, reverses, and then continues again. This repeating behavior is not accidental. It forms a cycle. So instead of asking where price will go, a better question is where price currently is inside that cycle. To understand this properly, imagine a circle. A circle represents continuous movement with no beginning and no end. If price follows a cycle, then it can be placed somewhere on that circle. This means price is not just a number. It is a position within a full rotation. Now here is where things start to shift. If price has a position on a circle, then it has an angle. And if something has an angle, it can be rotated. This means movement in price is not just direction. It is rotation through a cycle. So instead of thinking that price moved 50 points or 100 points, think of it like this. Price moved a certain number of degrees within a cycle. This completely changes how you look at the market because now you are measuring position instead of distance. Now ask yourself one more thing. If price is rotating through a cycle, can it do that instantly? It cannot. It takes time. So time is not separate from price. Time is simply how long it takes for that rotation to happen. A full cycle is 360 degrees. That same cycle also exists in time. This means every degree represents a fraction of the total time. So if you know the angle, you also know how much of the cycle is completed and how much is left. Now bring everything together. Price tells you where the market is. Angle tells you the position inside the cycle. Time tells you when that cycle is likely to complete. When you combine all three, you're no longer guessing, you are reading structure. When the market moves forward, it is simply rotating further along the cycle. So if you take the current position and move it forward by 90 degrees or 180 degrees, you are projecting the next stage of movement. Now, once you project that angle forward, you can convert it into time. If you know the full cycle duration, you can calculate how long it should take for that rotation to complete. This gives you a time window where the market is more likely to react. So in simple terms, you're taking price, converting it into an angle, rotating that angle forward, and then converting it into time. That is the entire method. It sounds complex, but the logic is actually very clean. Let's see how it works. In this example, we begin by identifying a clear completed cycle in the market. The movement from the low near 54.93 to the high near 77.58 forms the base structure. This entire move takes approximately 45 bars, and this becomes our foundational time cycle. Instead of projecting time using fixed additions, we apply harmonic expansion. The base cycle is multiplied using natural ratios, such as the square root of 2 and the golden ratio. This gives us projected time windows around 64 bars, 73 bars, and 91 bars. When these projections are placed on the chart, We do not expect an exact reversal at a single candle. Instead, we observe how price behaves as it enters these time zones. Around the 64-bar region, the market begins to slow down and lose momentum. Near the 73-bar projection, we can see a clearer reaction where price starts to weaken. As price approaches the extended window near 90 bars, the structure shows further continuation of the move with reduced strength.